SSCA Cruising Association. This is one of our webinars today. And these presentations are being offered as an educational information benefit to SSCA and guests. I'm going to drop my share and turn it over to Gary Golden, who is, I guess, President Director of Manifest Marine Insurance and an SSCA Commodore. And I'm going to drop the share. And Gary, turn it over to you.
Okay, hi everybody. Let me just get my screen up here and then we'll get going. So for those of you that don't know me, this is just a little bit about me. I've been a marine insurance broker for 30 plus years. And a lot of you might know me from my days at International Marine Insurance Services, or IMIS, which I started with my father back in 1987. We sold that agency in 2016. And before that, we were running, managing and administering the Jackline program, which is sort of in the news these days. So we'll talk about that a little bit. Did some cruising when I was a kid with my parents, and people used to always ask me, you know, would you ever do something like that again? And my answer was always, I will do that again. And fortunately, I had that opportunity almost 10 years ago now. It doesn't seem like it was that long ago, but we got a Moody 46 that we got ready for cruising and took off for a year and a half. Went down to the Gulf of Mexico and the Bahamas and had a great time with that. So before I launch into this, one thing that I want to confess to is that I'm something of a contrarian, and so one of the things that a lot of insurance companies and agencies do is they like to show you scary pictures. Just bear with me for a second. I sort of lost where I am here. Looks like I'm not seeing my screen. Joan, are you seeing the screen?
Yeah.
Okay, I'm not sure, for some reason I'm not seeing it, but hopefully I'm seeing like a little tiny thumbnail of it. Anyhow, so a lot of insurance agencies and companies trying to get you to sell insurance, they want to show you some scary things that can happen to your boat. But being a contrarian, I sort of like to show the idyllic photos. And it doesn't seem to be advancing. So that's what I wanted to show you guys. Is that's kind of what we all wish everything was like all the time. That's actually me on that windsurfer, and that's Nalani, and that was just one of our most perfect days. But unfortunately, the fact is that it isn't always that way. So that's why we do have insurance. As Joan mentioned, there's an opportunity to submit questions. There's a Zoom feature that some of you might already be familiar with, and so you can go ahead and submit those questions during the course of the presentation, and we should have some time afterwards to so that I can cover those types of things. If we don't get to them, or you have something that's kind of really specific to your situation that you don't want to share with the whole group, this at our website, manifestmarine.com, there's a way that you can submit an inquiry, and be happy to address those types of questions for you. But hopefully we can get to some good questions later on. So as is always the case, usually there's companies coming and going from the market. And this is sort of no different this year. It is the case, Pantaenius America is actually kind of exited the market some years ago. So that's sort of old news, but the interesting thing about it is that a couple of people from Pantaenius wound up at what was Gowery Group when we sold the agency, and then was bought by Risk Strategies. So they wound up at this Risk Strategies company working on the Jackline program, which a lot of you may have already heard. there was actually a discussion about it, a webinar about it a couple weeks ago, that the Jack Line program is being discontinued. And non-renewal notices are going to start going out probably in May for starting effective June 15th. So that's just going to be a big ruckus. We don't really know exactly what to expect. I got a little bit of more information about that since we last talked about it, but I'll cover that a little bit later on. Boat US is still selling policies through with basically their Geico operation. They're really starting to pull back even more than they have been in past years. They're doing things like not covering boats over 50 feet, not covering boats over 40 years old. And I think they may even be tightening that up some. I think I heard something, although I haven't been able to verify it, about not covering boats over 30 years old. Another company that was pretty big in covering at least the North American market, Caribbean in particular, was a company called Yacht Insure. And their policies were underwritten by a company called Clear Blue. But that company sort of pulled out. Now Yacht Insure is still in the market, but they're not covering boats that are in the Caribbean year round. So basically, even if you're down somewhere in Grenada or Panama or places like that are even considered to be below the storm line, they're still not covering them. But they're an option sometimes in cases. So sort of the biggest thing I think that everybody needs to be aware of and cognizant of it is there are a lot of companies, so-called companies out there that aren't really companies, or if they are, they just exist as a shell. That's why I call this slide the shell game. It's been going on for decades. I mean, as long as I've been in the business. So these companies come and go even more quickly because they're just in there to suck up some money and hopefully not have any big claims. And then when the big claims do come, they just kind of close up shop and disappear. The one that we've seen the most, I guess, is an outfit that's located in Spain, run by a British guy. I don't recall his name right now. It hasn't come up in a long time. And that's something you'll notice. I mean, this is what I want to kind of help you guys do, is kind of like have your antennas up for picking up on these types of things. So one of the things you'll see is that on their websites and their communications, you don't see names of people, you don't see addresses of locations. It's just they just exist as a pretty website. So we don't know who these people are. Oftentimes, I mean, you'll notice, just as a contrast, you'll see in the heading of these tables, you've got my name, you've got my physical location, you've got a phone number to call. And so these people that are legitimate operations will put their names and addresses and phone numbers out there. These other operations are just like, they just want to be a website and a way to draw money in. So Edward William is, to the extent that they have a physical location, they have people running it, that's in Spain. But they were, until recently, they were selling policies underwritten by a so-called company called Northern Reef, which supposedly was based in Uruguay. But that company supposedly went bankrupt, but we don't even know if it actually even ever existed as a company. In fact, Uruguay, when I did some research on the Uruguayan financial system, I found a list of insurance companies. Their list of insurance companies, and Northern Reef was not on it. So Northern Reef, I don't know if they even ever existed. Anyway, they closed up that shop, and now Edward Williams is trying to sell you policies underwritten by a company called Ion, which variously described as being possibly in Costa Rica, but their official legal location is in Pago Pago, which is in American Samoa in the South Pacific. You'll notice all of these, well, all four of the companies really listed are based on tiny little islands. Nevis in the Caribbean, Saipan, which is part of the Marianas Islands, I believe, and Pago Pago is in American Samoa. I do make a distinction with Spheric Assurance Company, and that'll come up that there's a distinction later on because we'll talk about them a little bit more. But British Virgin Islands are, again, very small place, but they're part of the British Commonwealth, and they actually have legitimate financial regulation and oversight there. So that's one big difference with them. Ion is again is in the South Pacific. This London Marine Insurance Services operation was selling policies underwritten by what was called Selecta until just a few months ago or a year ago. Somehow one of the things that I've always said over the years is, make sure you're working with a company that's rated by AM Best, because that way at least there's been some oversight into their financials. Well, now I have to be skeptical about even that protection, because Selecta somehow was able to get a B rating from AM Best. And in preparation for this presentation, I was researching that and could not find Selecta. It was just like not even coming up as a name anymore. And I was like scratching my head because it's like, I know I've seen it before. Well, it turns out they decided to change their name. It's another red flag. If you got a good business going, why do you suddenly up and change your name? So that's why they changed it from Selecta to Sunre, still essentially the same company, but again, just a shell company. It's located, their address is a small office in Nevis, which, as far as I understand, would be the office of the lawyer that they pay, whoever these people are, paid to set up a shell company for them. And pretty much the same is true of this Commodore company, but that name has not come up in the last year or two that I recall. So, but I'm seeing Ion and Selecta and now Sunre pretty frequently. So to show you some of the, I wanted to point out that I mentioned Nevis. So there definitely seems to be some type of nexus related to Nevis, because a lot of these shell companies use that as their location, so to speak. This is an example. Here's Commodore, which I mentioned I haven't been seeing much of lately. But you'll see they've got two different addresses given, not really clear where exactly their legal office is, although I assume that that's probably Saipan in this case, and that where they have that address of care of Gregory Coble. That Gregory Coble is probably the name of the lawyer that they paid to set up this shell. But they also have, as you'll see above that, a location in the West Indies on Nevis. And oddly enough, you'll see the email address given doesn't even have anything to do with Commodore. It's a address at offshorerisk.com. Now, offshorerisk.com is a Florida-based insurance brokerage. And apparently they have set up this company, maybe. Can't say for sure, but the odd thing is that the address of an insurance broker is given for the address of a so-called insurance company. And it's pretty complicated. As you can see from this, I just sketched this out, trying to help you understand all these shenanigans. And you'll see in the center of it is Nevis. That's why I say that there's something of a nexus there in Nevis. And because Selecta/Sun is supposedly based there. Offshore Risk Management, which is that Florida-based brokerage that I mentioned, also is based, they just have on their website a disclaimer about, if you need to sue us, you can't sue us in Florida, you have to sue us in Nevis. And then Commodore has the Commodore company that presumably maybe was formed by Offshore Risk Management, is based in Nevis, but also has a Saipan location. And then you've got, so ION has also a connection with Offshore Risk Management, which was an odd story. So one of the things I do to poke and prod at these so-called companies is usually you can find some type of phone number. So on the ION website, there was a phone number given, and I wasn't really expecting when I called it to get an answer, but sure enough, a lady answered the phone. So I said, I'd like to speak to somebody. I don't remember exactly what I said. This was over a year ago. I'd like to speak to somebody about marine insurance, probably is what I said. And she flipped through some papers and she said, what I thought I heard her say was just kind of funny too, was I thought I heard her say, you need to call Bill Gates. And I was like, what, seriously? But it turned out what she had actually said was Bill Coates, who is affiliated with Offshore Risk Management. So that was the phone number that she gave me. So when I called an insurance company, again, I was directed to contact somebody at Offshore Risk Management. Now, Edward Williams is also a broker of sorts and is selling the ION policy. Since they couldn't, Northern Reef got such a bad reputation that they couldn't sell those anymore. So they started selling the ION. And I sort of wonder about kind of hope maybe that I was part of the impetus for Selecta deciding to change their name to Sun, because I've certainly been complaining about their activities too an awful lot. So I just wonder if maybe that people were starting to recognize the Selecta name and decline that coverage, so they decided to better change the name. And those policies are supposedly sold from a company called London Marine, which may or may not exist in London. They do have a London address. The odd thing is, we work with something of a brokerage called Global Insurance Agency, and they sell both Spheric policies, which is the one that was based in the British Virgin Islands. And they also, through London Marine, have offered me Sun policy underwritten by Sun. So they're selling kind of both policies. And Spheric is a little bit of a different case. Actually, when I first became aware of them, they did not have a rating. Now they do now have a B rating, which isn't terrific, but at least it's something. And they are based in the British Virgin Islands. And that's why you'll see I had them somewhat separated from the rest of the group, because, and the other difference is, as I mentioned earlier, when there's actual people, when you know the people involved, there's actual people, their names, where they work at, that's a good thing. And so with the Global Insurance Agency, I know I've had direct conversations with some of the people that work there. And so that gives me a little bit more comfort to rely on Spheric than I do any of these other companies, which I would definitely shy away from. And so while you've all been looking at this sketch, you may have noticed that I sketched this on the back of a sheet of paper that had an image on it that sort of showed through pretty thoroughly. And you might be wondering what exactly that is, and I'm going to actually show you that image a little bit later on. So one of the things that the insurance companies, these so-called shell companies, do to seem legitimate, besides having a nice, pretty website, is they'll show you their financial statements. Well, just having right there on the home page the financial statement, a link to their financial statements, that's a red flag too. Because if you look at any big legitimate insurance company, you'll notice if you can find their statements at all, they're dug, you're hitting way down there. Sometimes they're just not even publicly available. You have to go to the shareholder website to access those types of things because they're publicly traded companies. That's, touting what would normally be private information is a red flag. They're just like waving something in front of you saying, look, see, we're legitimate. Look at all these big $1 million figures. But it's just made up stuff. And I've dealt with fraudulent companies that the FBI actually got involved with and sent people to jail with 30 plus years ago, and learned about some of the schemes and the way they do things back then. So these highlighted things are things to look at. But starting at this lower down stuff with the investments held, that's trick number one. You see this all the time, where their assets is what they're saying their asset is something held by a subsidiary of theirs. So basically they're saying we're worth a lot of money because our subsidiary is worth a lot of money. But you don't know who that subsidiary is, what that subsidiary is, what their business is. You haven't seen that financial statement. It's just, you could just put a number there and say that's what our subsidiary is worth. And it's largely true of oil and gas reserve things too. It's just, it's in the, that stuff's in the ground. You can say it's worth, why don't you say it's worth 40 billion, not 40 million? I mean, it's just, but the reason why they don't say 40 billion is because that would be hard to believe. So 40 million seems believable. But they're so lazy that they don't even bother to update it from year to year, as you can see here. So it's just made up stuff. And the notes receivable might actually be accurate. That's the money that the people have taken out of the company, but they don't want to reduce the parent. If they actually took the money, and they are actually taking the money out, but if they showed it on their books as taking the money out, then that would reduce the value of the company. So they do it showing it as if it were a loan, and they're going to pay it back sometime. But that money's not ever getting paid back, and you're probably not getting any of it if you have a claim. So that's the way the shell game works. So I want to cover some of the current options in the market. And I'm just going to gloss through. I mean, most of the people that are SSCA members, are cruisers and more interested in the blue water options. But just to quickly run through in case anybody's not actively cruising right now or isn't ready to start cruising yet, might be interested in some of the local options. So Concept Special Risks has been around for a long, long time. Not necessarily with the best claims paying record, which I'm going to cover in a little bit. But they're what we consider a good last resort option because their prices, I mean, they cover pretty much any circumstance. And because of that, they know and understand that they can charge a lot of premium. But they're useful in cases like, somebody's got a bad driving record, they're one of the very few that's consistently covering storm damage in Florida. They'll do charter risks and things like that. So, they definitely have their place. Yacht and Shore, as I mentioned, is still in the market, although they're not covering boats staying year round in the Caribbean. But for people that are coming back to the States for the season, or they'll cover boats on the West Coast pretty regularly. One peculiarity that they do, they won't cover eastbound passages to Europe, but if you're in Europe and about to come back to the Caribbean, that's something that they'll pick up coverage for the transatlantic if you're headed back to their territory, I guess you might say. But they're actually pretty good, particularly for boats that are going to be north of Georgia and or even further north. their their premium rates are pretty good. American Modern is essentially unbeatable premium wise throughout the country. I mean, and they'll cover storm damage in Florida even more expensive than other rates, but at least they'll do it. They're having trouble right now with the Tampa Bay area and in South Florida just because they have so many boats covered there now, so they're not doing storm damage there. Um, but their rates, I mean, all up and down the East Coast and on the West Coast, they're just definitely the best premium wise. And the problem is they're super fussy about, survey reports and things like that. So, a lot of times, we get a good quote from them and then we wind up not being able to actually place the policy because of that. But they're always a good first thing to try. I kind of group this next group with Progressive, State Farm, Nationwide, Allstate. These are all auto insurance companies that have at some point or another decided to get into boat insurance, and they're usually better for the smaller boats. State Farm, I've seen in the last year or two has actually seems like been particularly aggressive on the bigger boats. So, sometimes they might work out. But they're there for generally for the smaller boats. And then this other group, this next group with Boat US, which we kind of covered a little bit, and Markel and Chubb and Intact is another company, and AIG, which is also known New Hampshire's another name that they go by. They're all kind of have good marine departments, and they're kind of geared towards kind of boat oriented insurance companies, or at least they have a strong niche in that area. But they're all pretty selective about who they're covering. So they may or may not be an option in your case. Windsor Mountjoy is a company that not many people know about. They're a pretty small company. They're kind of our secret weapon, and we love them to death. They're great people. I can tell you that they actually exist. I've driven to their office in Pennsylvania and met the people there. And that's a great thing to know. They've been in business since 1844. But they're a relatively small company, and they concentrate in the mid-Atlantic. So they're kind of not, for boats in New England or or in the southern states that aren't cruising. They're not really an option for. So it's really just if you're not cruising, Windsor Mountjoy is really an only option for the mid-Atlantic states. But if you're regularly cruising, then they're a great option, and they readily cover the Caribbean. Don't need necessarily a lot of experience with that. They don't fuss about who your crew is going to be. They've got the premium rates are really good, particularly for the Caribbean. They've actually gone up they've gone up quite a bit this past year with some premium adjustments that they made, but they're still far and away the least expensive. They do have some quirks about them. They will not cover storm damage in the Caribbean. They'll let you stay there for the storm season if you want, but the risk would be on you for that. So if even if you're in Grenada or Trinidad, it's just they're just not going to cover you for that. But the nice thing is that you have that flexibility of if you want to stay down there, you can. Let me go back up to the top of the Blue Water options.
Gary, I have a question.
Yeah.
Yeah, your opinions are absolutely fascinating, and I've got a webinar chat question, and you're on this area, and it's Michael Whalen, and he says he has can you see the chat, Gary?
I think I had that open before, but I'm not saying it right now.
I have a policy underwritten by a Lloyd's insurer with Great Lakes Insurance SE, a Munich RE subsidy as a sub cover holder. I realize there's different legal marine claims approaches in the UK than US, but are there any other issues I should consider? And that was NVM you just listed.
So what was the name of his insurer again? You said it was Lloyd?
Great Lakes Insurance SE.
Okay. Yeah, well, that's one of the ones that I'm gonna cover
Okay,
here. I don't
okay,
know that
all
I
right,
can
great,
address specifically what his situation is,
right, okay.
but they yeah, let me well, I'll just continue down the list, but I'm gonna talk about Great Lakes for sure. It's another favorite of ours. Um, which again is odd because Great Lakes has some history that we need to talk about, but the current uh access to Great Lakes is through a really good company. But Concept Special Risks again, you know, they used to cover the South Pacific, but they pulled back from that. So they're, you know, kind of just doing Europe, the Mid, North America, the Caribbean, and the West Coast, Mexico, and so forth. Yacht and Shore, we sort of covered. That's again, they're covering the Caribbean, but not year round. Now, Global Yacht Cover is basically a I think the person in the chat mentioned something about cover holder. So it's essentially what Global Yacht Cover is they've been given authority by Great Lakes to issue policies in this insurance program that they're running. And they'll easily cover the South Pacific. It's basically I mean, well, the Lloyd's will cover the South Pacific for us too, but as most people know and understand, Lloyd's is super expensive. So I mean, this Great Lakes global yacht cover option is really the only reasonably priced option for South Pacific coverage. You know, and that would include Australia and New Zealand as well. And they'll cover Indian Ocean passages and up around South Africa if somebody's doing that. You know, we had occasion to ask recently about a Red Sea transit. Not surprisingly, insurers declined to provide that coverage, but they didn't seem to have any problem with the South Africa route. So now Great Lakes used to be the underwriter for Concept Special Risks. You'll see a Concept Special Risks is selling policies underwritten by Accelerant right now. It's actually a combination of Accelerant Specialty Insurance Company and Texas Insurance Company. So they're both participating in those policies. But Concept Special Risks used to sell Great Lakes insurance, but they're not anymore. And I don't know the details about why that stopped and why it's now available from Global Yacht Cover, but I can make some guesses about that, which we'll talk about on the next slide, I believe. But Great Lakes is a subsidiary of Munich Re, which is, again, talking about, you know, the difference between shell companies and legitimate insurance companies. Munich Re is a massive conglomerate. I mean, they have subsidiaries in probably most countries, including the United States. In fact, let's see if I can advance this slide here. There we go. American Modern, which I'd mentioned earlier, is also a subsidiary of Munich Re. Now, the policies are completely different, and the administration of the policies are completely different, and the things that they underwrite are completely different, but their main parent company is Munich Re, which is you know, a very widely known and respected company and A+ rated. So Global Yacht Cover has, I guess, their greatest peculiarity that makes it hard to get with them sometimes is they're fussy about the age of your standing rigging, and they'll insist that it be less than 10 years of age. And they don't like to hear things like, but it's only 11 years old, or I just had it inspected, or I'm not going that far offshore. It's just, they've just got that's their box, is less than 10 years of age. But if you can work, and sometimes they will, and it makes sense in some cases, they'll actually issue a policy where they're just not covering rig failure. You know, I certainly wouldn't ever recommend that to people, but I understand that replacing your rigging is expensive and you may still be confident in it. So it's something you might want to consider, and a number of my clients have. Another kind of fallback case, like kind of like I had mentioned, concept of special risks is expensive, and it's, you only want to go with them if there's no other options. Lloyd's is kind of famous or infamous for that. And you can get pretty much anything covered, but you're going to be paying for it. But they've definitely saved us in a few cases. I've got, a guy with a nice big boat that he bought in I guess he bought it in the Canary Islands, and then we ended up taking it to the Med the next year. But he had an old felony conviction for a accident that he had, and nobody wanted to insure him because of that history, even though it was like 15, 20 years ago. So we were able to get him a Lloyd's policy to cover that. Yeah, and they'll do boats in the South Pacific. They'll do pretty much anything. They're pretty fussy about storm coverage and where you're going to be for that. But as long as you have a decent plan in place, and you're going to be outside of the primary hurricane zone, like Grenada or further south, or north of Cape Hatteras, they'll usually cover you for that. So Pantaenius America is gone, but there are Pantaenius offices almost throughout the world. There's one in Australia. There's the one in UK, main one in Germany. There's one in Monaco that we've dealt with a little bit. They're still not. They're kind of back to not doing U.S. registered vessels. They had some kind of like gimmick where if you were registered in Delaware, they could cover you, but that's gone away now too. So. We don't tend to use them too much because most of our clients tend to be U.S. flagged vessels, but we work with other people too, and so oftentimes Pantaenius will be a good option for that. And then we had already covered Windsor Mountjoy, but again, they're just so easy to deal with. They'll even take, if you've got a production fiberglass boat, they'll even accept an in-water survey. So there's a lot of things about them that we like that make it easy. So that's sort of an overview of what's out there these days. Although, we know that the jackline program is going away, and supposedly the previously existing helmsman policies program is being expanded to cover that. I've only gotten one piece of feedback so far, and that was from a Markel agent who confirmed that cats are acceptable per these new guidelines, because they never used to cover. They stopped covering catamarans in the helmsman program, I don't know, like 8 or 9 years ago, maybe. Now they're covering them, but this agent told me that he got a quote on a catamaran, and the premium was $4,000 higher than Concept. Concept being Concept Special Risks, which you might remember I told you is one of the most expensive companies you can find. So I'm not too hopeful about what kind of premium rates we're going to be seeing from this new helmsman program. Although I will say that I would anticipate it won't be quite as bad for monohull boats than it is for catamarans, because for whatever reason, Markel has always been somewhat prejudiced against catamarans. And they're, to be honest, I've seen the premium rates for catamarans should be somewhat higher. They're certainly insurable. Companies shouldn't be turning them away. But they are more susceptible to structural issues. They're more susceptible to lightning damage because of the fact that the mast doesn't go down near the water. That's my perception of it anyway. Just there's a few other things, that just the overall losses for catamarans are going to be higher than monohulls, but that doesn't mean you should be charging double or that you shouldn't be insuring them at all. So, so remains to be seen what the Helmsman program is going to turn out to be like. In the meantime, there's some things going on that we can talk about. And one is something that probably a lot of people have heard, even in the national news, about a case that was at the U.S. Supreme Court not too long ago, which was styled Great Lakes versus Raiders Retreat. I have added here concept special risks because Great Lakes, I think, I mean, I don't know what the public perception of it is, but I always felt uncomfortable about Great Lakes being lambasted for this case and others, and believe me, there are others, because it wasn't really Great Lakes that was driving all that. It was concept special risks. So concept special risks have been given authority by Great Lakes to issue policies, set premium rates, and handle claims. Concept special risks is really tough with claims. If they see an out, they're going to take it. Doesn't, and again, I just doesn't mean you shouldn't ever buy their policy, because you might be in a circumstance where you have to. But it makes this case all the more clear as to how important it is to know and understand and respect the terms of your insurance policy. That's basically what this case was about, or at least revolved around. And I want to thank Peter Swanson for this cool image. He has, if you're not familiar with it, he has a blog, I guess you might call it, that he does called Loose Cannon, and he wrote a pretty good article that kind of covered the detail of that case. So you might want to check that out if you haven't already seen it. I just love this image of a boat buzzing past the steps of the Supreme Court. So I definitely wanted to share that with you all. But the case is, there was a legal aspect of this case that brought it to the Supreme Court, which was essentially, can an insurance policy state in it where, or what state's law will apply to the policy, irrespective of where the boat's located at. And so I actually have a client that was caught up in somewhat similar circumstances, and their boat was in Florida. And so the question became, should the boat was kept in Florida, at least one of the owners of the boat lived in Florida, damage happened in Florida, should Florida law apply? Well, in this case, in the case of concept special risks policies, it specifies that New York law will apply. And there is something of a difference there, because New York law is still adheres to the old traditional maritime rule of that if there's any breach of any warranty or any misrepresentation in the application for the policy, then the policy is just void from its beginning, and no claim can be made against it. And that's kind of historically the way marine policies have been. Now, some states and some federal jurisdictions have weakened that by stating that that you can't be that tough on a policy holder, essentially. And I have mixed feelings about it. I mean, certainly if a policy states that you should do a certain thing, then you certainly should be doing that thing. But I also understand that insurance companies can take, unfair advantage, perhaps, of those types of loopholes. So the Supreme Court, in a unanimous decision, and it just seems to be hard to get unanimity on anything from the Supreme Court these days, but they were pretty adamant that the policy, that the concept special risk policy that had been issued that stated that the law of New York State should apply is in fact to be upheld. So now that, so the boat owner is still not necessarily out of luck because that the case hasn't even been heard yet. This was just a question of when the case is heard, what law should apply. So, but of course, it's, you know, with it being New York law that applies, you know, I guess I wouldn't be too hopeful on it because they, you know, basically any small little detail that, you know, where a warranty has been made and the boat owner didn't comply with it, it's basically means his policy is useless. I covered this a little, there's not in great detail, but there's a little bit of a treatise that we have on marine insurance in general that we have at our website. So if you go to manifestmarine.com and follow this menu here, you might want to check out our about marine insurance article, and it does cover that. Matter of fact, you'll see just there at the bottom, just before it gets cut off, it uses the term utmost good faith. And there's a similar Latin term, which I won't try to pronounce because my Latin accent's not that great. But it's a long-standing maritime law understanding that these things are critical to insurance underwriters, that everything you tell them, you know, must be completely accurate, and they need to be able to rely on that. And again, there's some logic to that, although, you know, that tradition developed in days when we didn't have the types of communications that we have. And so, you know, maybe there should be some type of shift to understanding that if insurance underwriters want to see a picture of the boat, you can actually get them a picture of the boat, whereas in the 1700s you couldn't do that. So, you know, I'll say that's a really long, slow process of legal development. But in the meantime, if anybody's interested, feel free to read that article. Another thing that's kind of been going on lately, particularly, is the marina insurance, or marinas requiring insurance. But before I address that, I wanted to briefly mention that there are certain places that you visit that do require that you have not just have boat insurance, but have liability insurance in particular. But you have to have a certain amount. Spain and Greece have requirements, but just about everybody already has enough coverage to meet that requirement. Italy is peculiar. They have, I think it's an odd number that's adjusted by inflation, but I think it's like 6 million something euros these days. So some of the insurance companies have special arrangements with Italian offices to get your coverage boosted to comply with those rules. It's not something that's heavily enforced as far as I know, but still you kind of want to avoid the chance that you might run afoul of the authorities. In Australia, there's an odd thing in Australia is Australia itself doesn't have a rule, but Queensland does, and I guess that's because that's where Great Barrier Reef is. So they're particularly sensitive to liability exposures, particularly wreck removal and salvage and that kind of thing. And it had been 10 million Australian dollars was a requirement, although I saw something recently that intimated that it might have been boosted to 20 million, which is an awful lot of insurance, but that's something that to be aware of wherever you're headed. With the marina insurance requirements, I mean, that's sort of been going on for decades now, and some lawyer for some marinas somewhere got the idea that, hey, you know, we can probably protect you a little bit from lawsuits if you get all your slip holders to name the marina as an additional insured on their policies. And then that just kind of like spread like wildfire from marina to marina to marina. And now we've got Safe Harbor, which is another conglomerate, a marina conglomerate now. And, you know, they've not only got marinas all up and down the East Coast, but they've got like a headquarters where they've got like staff checking your insurance policies to make sure that they meet all the requirements. And something that we used to used to be able to do pretty regularly for people, and we still encourage this, is to just submit a certificate of insurance to your marina rather than actually having your policy amended to name somebody else as an additional insured. The reason being is when you have other parties, excuse me, as part of your, this might be the end of the presentation. When you have other parties named on your insurance. So here comes my rescuer. Thank you, dear. When you have other parties named on your insurance, you're basically relying on them to do the same things that you have to do to keep your policy from being voided. We were talking about, complying with all the warranties of a policy. So, like you can't intentionally damage your boat. You can't take it outside of the territory. You may not be able, I mean, just an extreme example, you may not be allowed to operate the boat at night, for example, which are things that might void your policy somehow. So as long as you've read your policy and you know what those things are and you can comply with them. But when you have other parties that are part of your, that are also part of your policy, if they do those things, they're voiding not just their coverage, they're voiding your coverage. So it's sort of a far-fetched scenario, I understand, but it could happen. And we all know that weird things happen on boats. So it's something to bear in mind. The other thing is it just, even if none of that happens, you're still reducing your coverage amount, because if you have, say, for example, $500,000 of liability coverage, and now you're sharing that with a marina, then you have less than 500,000 because it's going to be, the coverage is being shared between you two. As a practical matter, if a marina is going to require, insist on them being named on your policy, then you can go to the next marina, but you may just want to take the risk too. So it's just something to bear in mind as you make those decisions. You might wonder why I have Markel listed here. Well, I was flabbergasted when I saw this. Oh, wait a minute, that's not what I wanted to. Well, let me just jump ahead on all this. This is what I wanted to show you. This is a request from a marina to be named as an additional insured. But not only does the marina want to be named as an additional insured, the insurer of the marina wants to be named as an additional insured. Never seen this before. So I wrote to my client that forwarded this to me. This was my response to him about saying that this was a new one on me, and just saying, hoping maybe that this is the moment that this whole cross insurance scheme becomes so blatantly ridiculous that it all comes crashing down. I'm hoping so. I can just imagine every insurance company that insures a boat owner is now going to have to name some other insurance company on their policy. I just can't see insurance companies doing this, but we shall see. This just happened earlier this month, so I don't know if it's going to be a regular thing. Let me go back to this other stuff because this is super interesting. And so we were talking about the Great Lakes concept special risks versus Raiders Retreat case. So just to demonstrate the fact that this was really not Great Lakes that was caused that's brought this case to the Supreme Court, but it was really concept special risks functioning on their behalf. Are these this record of these court cases. But you'll see, early on, before 2017, when Concept started placing policies for Great Lakes, Great Lakes was quite a quiet little company and just had a lawsuit, one or two lawsuits every, 5, 10, 15 years, whatever. And all of a sudden, Great Concept Special Risks starts selling policies. And I should explain, you'll see that it says Great Lakes Insurance versus, and then somebody else. That's because Concept Special Risks takes the notion that the best defense is a good offense. So when they feel like they have a case to deny a claim, they won't even just write you a letter saying, here's how we feel about this case, and we don't think we should pay it, and let us know what you think about that. They just get their lawyers to file a lawsuit, trying to get the court to agree with them. So you'll see this just ramps up all these cases in 2017, 2018. There's a bunch in 2019. 2020. I don't know for sure that all of these are even marine cases, but it's a pretty safe bet that most of these are all cases that were brought by Concept, by Concept Special Risks and their claims department and attorneys. And it just goes on and on. And finally, in 2021, we get to the famous case that made it to the Supreme Court that's highlighted, the Raiders Retreat Realty Company case. And I also highlighted the another case that's around the same time, just because I happen to be familiar that all these others don't know the details about what they are, but I happen to know that that other highlighted one happens to be a boat that was struck by lightning in Panama, and again encountered the same thing that happened in the Raiders Retreat case, which was, well, we can't cover you because your fire extinguishers aren't up to date, even though there was no fire. Again, the policy did say, you agree that you will keep up, the fire extinguishers and have them regularly recertified. So they're legally in the right, but it's tough, and I'm not very comfortable with it. Like I said, cases just keep continuing, but then we finally had a case where we actually had this highlighted one is actually a client of ours. I want to go back a little bit here because you'll see in 2022, most of the Great Lakes cases kind of wind up there, and now suddenly we're seeing Accelerant Specialty as the plaintiff in these cases. And that's, as you'll recall, it had said that Concept Special Risk shifted from selling Great Lakes policies to Accelerant policies. And there was actually another company briefly in between the two, but just for simplicity, I'm just showing the Great Lakes and the Accelerant cases. So you'll see, so going into 2022 and 2023, there's still a few Great Lakes cases that came up, but most of them are all Accelerant cases now. So I have no grudge against Great Lakes Insurance, because I understand that, it wasn't the administrators at that company that were making these decisions. It was the people at Concept Special Risks that were doing this. And again, like I said, so Great Lakes has been a terrific company for us with through the Global Yacht Cover program. Easy to work with, and decent rates, and can cover a lot of cases.
Gary, can I interrupt for a second? This is Joan.
You sure may.
Yes. You mentioned the expired fire extinguishers being a reason. Correct me if I'm not mistaken, but even if you had something like expired flares or expired anything like fire extinguishers that would that void, could that be considered voiding your policy?
It could raise questions, but it's not as clear cut as the fire extinguisher issue. And this is specific to the concept special risk policy, although I believe some other policies may have similar wording. But the concept special risk policy has a very explicit clause in it saying that if there's any fire extinguishing equipment on board, that it will be annually recertified.
So basically read your policy.
Yeah, and that was I think that was Peter Swanson's conclusion in his article about that he wrote about the Supreme Court case. And the only issue I take with what he wrote and the way he characterized it is the newness of it. In other words, the implication was that the Supreme Court has decided something, and so now we all have to start reading our policies and abiding by them. And that's not new. That's just that was just the Supreme Court, reinforcing how important that is. And me as your insurance broker, I'm going to reinforce them. It's just like there's nothing you should plan on getting away with. It's just, if it's in the policy, please make sure you do it and abide by it. And if you can't, for whatever reason, please let your insurance broker know so he can pass that on to the insurance company. And the insurance company may say, well, forget it. We're gonna issue a notice of cancellation because we don't like that. But at least then and you can look for other insurance or make other arrangements or something. But to forget, to buy a policy and then just toss it in the drawer is I mean, you're still likely to have a claim paid, but I would take the extra time to really read and understand it and ask your broker if you don't understand something.
Gary, thank you. We have a few more minutes. We have at 6 o'clock and we've got some questions. So if you will continue and then let me know when I can we can start the questions.
Yeah, this is my last slide. So I just want to just kind of cover a few things. I think it's my last slide. Let me see here. I know we're getting towards the end. So yeah, the one thing that's just an ongoing thing that I think is going to continue is the movement towards higher storm deductibles. We've got companies now that are, I mean, 10, but when I started the Jack Line program and we had a 10% storm deductible in there, that was like new. Nobody had ever made them that high, but we wanted to make sure that the program would survive, which it did for as long as I was managing it at least. So we set it high for that, but then 10% kind of became the norm over the years. But now we're seeing 25% deductibles, 30, 40% even, and I mean depending on the age of the boat in certain circumstances. So that that's I mean that's going to stay at least. And then I just wouldn't be surprised if eventually the marine insurance market becomes something similar to the flood insurance market for homeowners insurance, where it's just not something that insurance companies cover. It's too catastrophe prone to fit with the insurance model. I don't really feel like that's necessary, but I also understand that insurance companies aren't good at managing their exposures and risks over the long term, and so that may wind up being what happens. I'll throw out the thing that I tell my clients individually, and anybody that will listen, is there is one sure way to avoid a hurricane, no matter where you are, and that's to move quickly and as soon as possible if your area is threatened. It can be easier or harder in certain places, but it really should be the first, at least the first thought, in your planning for an upcoming storm season, because even if you put the boat, store the boat ashore and tie it down, it's still not a guarantee that you're going to be protected from a category 4 or 5 storm. So it's just the ultimate answer is to not be there when the storm comes through. So, and just the underwriters, again, like I said, because underwriters aren't real great at managing things for the long term, so they'll come in hot with low premiums and then have too many losses and they'll disappear again. That's what happened with Pantanius America, at least. It's not that unusual. And then it's constantly in flux. So hopefully you've got an insurance broker that's light on his feet and can roll with the punches and move on to the next best things. But unfortunately, because of all that difficulty, the fraudsters are going to continue to be a presence in the market because when it's super expensive, or companies are requiring to have strong crew requirements that you can't meet or don't want to meet, and somebody comes along and says, well, here, why don't you have this policy from this company, because we don't have crew requirements and you don't worry about getting a survey, and that's fine if you want to be in the storm zone during the hurricane season, we'll just charge you a little bit more. Those are things to watch out for, because they may be just looking to collect a little bit of money before they disappear. So, and I don't want to get too hopeful about a program that might solve most, if not all, the problems in this market, but there's definitely a prospect for that. I think a good, sensible, long-term thinking underwriter could set something up like that would really be a savior for all of us. And I hope that happens, or I can be involved in that or make it happen. But it's a complicated process, and finding underwriters is not easy. So Jen, you want to hit me with some questions?
Sure. Now I've got questions in Q&A, and then I have one from Jason Spitz. Jason, are you able to stay on long enough for this? Just say yes or no, raise your hand. And Ellen says, Berkeley one's not mentioned. Reasonable company.
Yeah, I think Berkeley is an agency. I've heard of them before. A lot of people have some a little bit of confusion about what who's involved in their policy. I mean, we've written policies where there's like 3 or 4 layers of administration, and particularly the Lloyd's policies are structured, or super complicated and structured. So you've got the underwriters at Lloyd's, and then you've got a Lloyd's appointed broker, and then you've got another probably broker in England that's working with the Lloyd's appointed broker, and then you've got us working with that broker, and then our clients. So it's there can be several layers. A lot of times when people say, tell me they're going with somebody else besides me, and I'll say, well, who did you go? Who did you wind up going with? And they'll just tell me the name of their broker, which doesn't really tell me, whether they went with a company that has an A+ rating or an unrated company, and I'm always curious, because maybe they went with a company that I haven't heard of before. That might be a good new one for me to check into. But a lot of times they don't even understand that the person that the name that they're giving me isn't the actual insurance company. So that's something to be cognizant of. Is there's you may have an agent, and there may be a broker, and there may even be a broker, or what I sometimes call managing underwriter, which is like the one that's like issuing the policies and stuff, but they're not even the actual insurance company. But somewhere on your quotation and somewhere on your policy, and even if it's in fine print somewhere, should be the name of the actual company who you have a contract with to pay you in the event of a loss. Have something else, Jen? It looks like you're muted, Jen.
Yeah, sorry about that. Gina, in the question and answers, has a question about her older boat. Beautiful boat. She has an old 1958 wooden boat. Who would you call for insurance? She's in great shape, has been surveyed. She's currently insured by Geico, but probably not beyond the Chesapeake.
Well, if we're on the Chesapeake, one of the companies we would definitely go to would be Windsor Mountjoy. They're great with the older boats and wooden boats, and would be good for a boat that's on the Chesapeake. And again would cover. I mean, if you were doing some extended cruising down to the Caribbean or something, they would cover that too.
Well, that's a good lead there, Gina. And then Jason Spitz has a question. I'm going to ask you first his last question, and the longer one is about his boat specifically. But Jason asks, can you also quickly address liability only policies and their availability for cruisers?
I'm sorry, say that again.
Can you quickly address liability only policies and their availability for cruisers?
Well, their availability is problematic, and it's largely because because the liability exposure, the actual risk of liability is so much less than actual physical damage to the boat owner's boat, and so the premiums for that are consequently much lower, and so the insurance companies, just as a practical economic matter, don't like to sell those low dollar premiums, and so they just basically tend to avoid it. In the U.S., if you're just doing local cruising, there's a lot more options. A lot of the kind of auto boat insurance companies do that kind of thing. And in some circumstances we have Blue Water underwriters that will cover that, but I mean, they're like the cheapest. I mean, it used to be like available for like around we had a few that were doing it around $500. But now like the least expensive one is typically in the $2,500 range annually. But at least they're offering it. I mean, that's much more than the actual exposure, what the premium would be for the actual exposure, but they're bumping it up to make it attractive to them to go through to have all their staff. They've got just a lot of overhead stuff, so they want to keep the premiums from getting too small so that they can afford that. And that's particularly true with Blue Water cruising underwriters, because it's still a very manual process. They don't have like online quoting websites where you can hit a button and the policy gets issued. They got staff and people, and they still got to handle all that. So I appreciate, even though it's pricey, I appreciate the fact that an underwriter is willing to do that than to just say, no, we're not going to offer liability coverage. Other than that, I mean, now the Jack Line program used to offer liability only policies, but then when Gallery Group took it over, they sort of pretty quickly took the position that they didn't want to sell low dollar premiums either. And in fact, they also set minimum hull value amounts. I don't remember exactly what the figure was, but they decided they didn't want to insure low value boats anymore either, which was pretty disheartening to me, because when I was running the program, and I still take that view today, it's just I want to try to help everybody. I mean, I may not make as much money on the commission, but it's just it's a challenge for me, and I just want to be able to help out. So anyway, what I was leading up to is that, so with the Jack Line program, you used to be able to get liability only policies, but haven't been able to lately. But I understand that in this Helmsman Cruisers program that they will be offering, again, liability only options. That being said, you may find it difficult to find an agent that's willing to do that for you, because like I said, the Gallery Group did this, and a lot of agencies take that position that they don't want to insure small boats, or they don't want to insure low value boats, or they don't want to insure liability only policies because they want to sell the bigger premiums. So that's the lay of the land on that, I guess.
We have one more question, Gary. And you may, Jason may want to take that offline, but let me at least go over what his question is, because it's pretty interesting. And Jason has a beautiful cat. We've been on it. And he says, "Hi, Gary. We found it increasingly difficult to find legitimate insurance for our 1999 40-foot catamaran that we've owned without a claim for 11 years. Florida residents, but full-time cruisers. Geico dropped 3 years ago with little warning, and we picked up State Farm, which is great, but it's limited to the US and Bahamas. We want to visit the Caribbean next year and hopefully spend hurricane season in Grenada. We, of course, want storm damage coverage, which we see as our biggest risks. And they're both US Coast Guard captains, sailing endorsements, top 1% credit, perfect boating and driving records, et cetera, et cetera." He talks about concept, special risk policy was not acceptable. It was very expensive, had huge deductibles with depreciated value versus agreed value, and evaluation was 50% below market. Are there any possible options for us?
Yeah, it might be tricky, but there's a way to do it. It's kind of becoming a specialty of mine, unfortunately. But I just had a client where I basically wrote two policies for him, because one company would cover one part of his plans and the other company would cover another part of his plans, but I couldn't get any company to, well, I could get a company to cover all of his plans, but that was Lloyd's. And so it was like, that was in the seventh, I think that was premium, the annual premium was going to be in the 7,000 range. But by getting him two separate policies, the total cost wound up being around 4,000. So, I mean, he's by getting him, this kind of hybrid two policy coverage, you're saving like 3,000 something dollars. So in Jason's case, I think I'm remembering his name right. In Jason's case, he's already got a policy covering him in the U.S. So we probably, particularly if he's going off, down the Caribbean soon, it would make sense to just run that, to keep running that. And then the company I would have in mind is the Global Yacht Cover program, because they do cover boats in Grenada during the storm season for storm damage. But their problem is because of their licensing issues, they won't cover in U.S. waters. So basically, this would be like a two policy solution as well, where basically we could set up a policy so that the moment you leave U.S. waters and your State Farm policy is no longer valid, this other policy would then kick in. So that's a possibility. Although one thing I haven't mentioned yet is that Global Yacht Cover does have, in the Caribbean in particular, has a minimum value of 250,000. So that, depending on the current value of that boat, that could possibly be an issue. But and then they have that rule in the Caribbean, but not in the South Pacific and not in the Mediterranean. So, but it's tricky because I mean they're a great option in a lot of cases, but if people are starting their cruise in the U.S., then we can't get them that policy until they're out of the U.S. And sometimes the timing of things becomes a little tricky. Anything else?
Gary, thank you very much. There's no other questions. Does anyone else have any questions at all? We still have quite a crowd here. And
how many do we have?
You've had over 35 just here, but then also live stream. And I can't tell you on the 35 on the live stream. And from Jeffrey and Susan to everyone, thank you, Mr. Gary.
It's definitely a little disconcerting, speaking to people that I can't see or hear.
Yeah, and it just the way it is. And I'm going to have to scoot because I've got another webinar starting up pretty soon.
Okay. Well, thanks for coordinating this, Joan. I sure appreciate it. If anybody has any questions, feel free to reach out at the website.
Well, we've got quite a few chats in here. Everyone's saying thank you, Gary. We really appreciate it. And gave us a lot to think about. You always state your opinions, and we appreciate that.
This is true.
Yeah, and you know, everyone had, we want everyone to be able to have their, say their opinions and because it's, you know, that's what we are, we're cruisers. So thank you very much, Gary. We will be talking to you again soon, I think. Are you going to be at the Annapolis Boat Show Spring Show?
I wasn't planning on it, but maybe I should.
Yeah, we'll have a booth there, so come join us and talk.
Okay, sounds
And,
great.
you know, and I think Scott from will be there. There'll be quite a few people there, I think. So,
Mhm.
but thank you very much. Thank you, everyone. And I'll say goodnight. And I'm turning around and running the heading north planning session next at 7 o'clock.
Okay, take care, everybody.
Bye.